Hello and welcome to the Books Crypto Club catch-up on Zoom. It is Sunday, the 19th of December, 2021, and today we're going to be talking about, well, who really knows? Maybe cryptocurrency, blockchain, DeFi, NFTs, ICOs, STOs, any other three-letter acronym really. Really depends upon who comes along and joins us as to what we end up talking about. So hopefully you'll find something of interest in this recording. If you do, then do remember, please do click on the subscribe button, click on the like, click on the reminder notification so you get to find out about future events. But also as well, do come along. These sessions are open to everybody, novice and expert alike. They're intended to be informational and educational, so don't feel shy, whether you're a novice who has some basic questions that you'd like answering, or an expert who'd like to share some opinions, ideas, theories, or whatever. Everyone's welcome to this. So with that, let's see who's going to come and join us today. Hey, Rob, you enjoyed it so much last time you decided to come back again.
Well, that's right. Well, you know, it was an hour of your time.
Yeah, and the funny thing was, I've had feedback from people who actually watched the recording who said really? that was really good. Thanks. So that's the kind of thing. We don't always need other people to come along. We have got someone else. I don't know if it's Sam or someone who's trying to connect in at the moment.
Right.
Mike, hey there. How's it going, Mike?
All right.
Yeah.
I've been back for quite a few weeks, so.
I was going to say you were on a few weeks ago, weren't you?
Yeah.
That's good. Well, welcome back anyway. I think we may be getting a few more people this evening as well, which is great. I guess everyone's keen to have a chat before Christmas arrives and gets in the way. Although in the crypto world, no one really cares about Santa Claus.
It doesn't stop, does it?
That's right.
It's 24/7. So yeah.
Exactly. And that's what makes it interesting as well. That people sometimes talk about, like the holiday shutdown and that kind of thing. It's like that doesn't work in crypto. So
yeah, and I like it for that. So because unlike stocks and shares, you know, if I wake up early and I've got to leave at 7, but I wake up at, you know, I've got 15 minutes in the morning, I can quickly log on and have a look, where you can't do that with shares.
Yep, you have to wait for the markets to open and then they close and everything like that. That's good. Hey, Peter, you managed to find somewhere to sit.
Hi.
Hey, Peter, how's it going?
Okay, you?
Not too bad. You've been watching the markets at all this week?
Yeah, somewhat this week, yeah.
Okay. You're always my go-to person for the others who are on the call, you know, Mike and Rob, but Peter's a star at looking at some of the data that a lot of other people don't look at. So, you know, things like, I guess volumes and that kind of thing is one of the main differences, I think. Whereas some people just look at candlesticks and look at things going up and down. But Peter looks a little bit deeper. Is that right, Peter? You do take more of an interest, don't you, in the more fundamental areas?
Yeah, more kind of on-chain stuff then. I mean, kind of technicals is useful to some extent, and kind of builds part of the picture, but in combination with on-chain is generally a lot more useful.
Mm-hmm. And it's something that's kind of unique again compared to stocks and shares, that it does give you some greater visibility to the movements that are going on in the markets in some way that you don't get to see with shares, except you've still got the equivalent of dark pools going on that you don't get to see what's going on within an exchange. You only get to see once the transactions hit the actual blockchain layer, I guess. Is that fair, Peter?
Yeah, well, the kind of on-chain data, you only kind of see once kind of money moving to and from exchanges.
Yeah.
But the kind of exchanges themselves, you can get a lot of data out of them about what's going on as well.
At least that gives us a bit more visibility. And hey, we've got Nick has joined us as well. Hi, Nick.
Yeah, I mean, I'm a member of all this London DeFi groups, all these groups. So I'm watching it's my first time I'm dialing, but I watched a couple of replays. So I know what you do. I know about this call, just so that I will jump on the call today.
Oh, brilliant. Because I was just saying to Rob before, I think it was last week that it was just Rob and I talking to each other, and he thought it was great because it meant we got to chat about a few things. But it was interesting how many people have been in touch this week to say, oh yeah, I watched the recording and it was really good just watching the two of you type thing. So that's great. Hi, Adrian.
How are you, Gary?
Hey, we can hear you now, Adrian. How's it going with you then?
It's a bit early. It's 5 a.m. in the morning, but that's okay.
I was going to say, because is it Brisbane you're in or Melbourne?
Brisbane.
Brisbane, yeah. I was trying to do the maths at what time of day it was, and I was thinking we must have woken you up in the middle of the night.
No, not middle of the night, but it's early. It's early.
You certainly like to start the week early. That's good. So
yeah.
Just for anyone else who hasn't been along to any of these sessions or hasn't watched any of the recordings, I just host these each week, and they're just totally open to anybody to ask questions, make comments or whatever. I don't have an agenda or a structure, so it's totally led by you folks. If there's something particularly you'd like to talk about, or if you're a novice and there's something you don't understand, then fire away, because we've usually got some experts who can help us. I don't know, maybe Nick to begin with. Are you, you say you're a member of all the various DeFi groups and that kind of thing. So do you have some experience in this area already?
Yeah, pretty much. I'm trying to be more involved in DeFi space. I'm coming from more kind of institutional capital markets, not crypto, but more kind of institutional, and watching the space, trying to figure out how to transfer some of the kind of traditional finance to DeFi space. That's what I'm trying to kind of. And because DeFi changes so fast, it's really keep track of what's happening. So I thought like I'll jump on this call to see what's happening on your side in terms of what you see recently.
So are you looking at it in terms of like what the asset managers, hedge funds and that kind of thing are doing? Or are you doing it more from the traditional migration from stocks and shares to crypto market?
Pretty much I'm trying to see how like the traditional primitives, let's put it this way, are moving to DeFi. Like right now I'm trying to learn more about how the decentralized options work in DeFi. So this like is the next big topic. Everybody's right now talking about decentralized options, and
okay,
it's hard to keep track of what's happening. So
yeah. I'm kind of curious as to what a decentralized option really means or really is.
So it's like effectively it's like the same options, but they're traded not on the centralized exchanges, but on decentralized exchanges. And
okay, so they're just running on a DEX or something.
Yeah.
Yeah. Okay. Yeah. It's something I've not had any direct involvement in as yet. I don't know. You know, Rob, you're still describing yourself as fairly early days in this crypto space. So I guess looking at things like options and that is probably a bit early in your journey. Or have you had...
Yeah, definitely.
Okay.
Yeah, you know, I'm interested in what people say, even if it is over my head. It's, you know,
yeah. I think
it goes in and gets stored for later.
Yeah, I think that's something. When I first came into this space as well, I probably understood about 10% of what people were talking about. And then the next week I understood 15%, and then the week after 20%. So it's learning through osmosis or whatever. I guess we can learn on it. Yeah. I don't know, but Peter, do you have any involvement in like the derivative side of crypto? So things like option trading or pools or anything?
Not directly. Some of our underlying managers do that, or we're looking at managers that do that. I'm not that involved in that side. I've done some reading into it,
okay.
But no expert. I mean, I had a rough idea. I can't remember. Like it's been a while since I've done a bit of reading into it, so I can't like explain it like like batch off. There's the various ways in which these kind of derivatives are and decentralized loans are structured, and kind of various ways in how to collateralize if something goes wrong, which is quite innovative. But I'm not close enough to our fund research team to know the ins and outs of all this stuff.
Fair enough. I think it's definitely an area that people are happy to say they don't know that much about, which is kind of good, because you get too many people who claim they are experts in stuff that they haven't got a clue about. It kind of works back. So I guess answering your question, Nick, is that we probably haven't got anyone on the call today, unless Adrian is going to correct me and say, well, actually, Gary, I do also.
Well, I just say it just was by the way of my introduction of my area of interest. I'm kind of, I mean, I'm looking at also trying to look at the NFTs. I mean, it's like I'm into crypto, right? So it would be to see what I see, because the space is evolving so fast, right?
Yeah. Yeah, and NFTs is another interesting one because that continues to explode in interest right now. And I think that there's a few trends that I've seen which are continuing. One is that the number of NFTs are increasing whilst the individual value of NFTs is decreasing. So it's coming towards a more commoditized market. But also there's more and more growth in big names announcing that they're getting into NFTs. So whether it's the big brands, the Adidas, the Coca-Colas, this kind of thing, several of whom recently have announced that they're getting into NFTs, and sports clubs. It seems every football club I hear of now has got an NFT proposition for its members, or sorry, for its fans or supporters. So that's all pretty good stuff. I don't know, Rob, have you got any immediate questions that spring to mind today?
Not at the moment, no.
Okay. Yeah.
No, I'm happy to just sit and observe for the minute.
And Mike, you're fully experienced as well in this space, I seem to remember, because when you come on previously, you're quite knowledgeable.
Yeah, I don't work with NFT, I work with DeFi, but I went to one of the token 2049, and they have one side the NFT, the gaming people, and then the other side the DeFi people like that. So that's why I kind of get some exposure on the NFT side. Okay. But we had personally there's an artist, and I think she lives in Dubai. She creating some. She recently started doing some NFT arts in Dubai.
Okay. Because I think there's quite a few artists. I mean, I run the NFT community WhatsApp group, and there's a few digital artists in that. And it's certainly an area that's gaining more and more interest. And there's some amazing artworks as well. It's not just crypto punks and sharks and that. There's some incredible crypto.
I mean, one of those that I really am impressed with is People Pleaser. She has some really high, really good kind of tech skills in doing some of the 3D arts within the NFT things. It's a really cool thing.
Who's that? Is that Visa?
People Pleaser. PPLPLSR.
Okay.
I think she's from New York. Emily Yang, she's her real name's actually.
Okay. The one I was following is Nano Burks.
You should take a look at her. I mean, People Pleaser. She's pretty cool. I heard she created a VC fund as well after doing the NFT sales and things like that.
Okay. Yeah. Because there's still a big interest in the whole, the platforms like OpenSea and Rarible as well, who seems to have carved out a niche in this area. But it's interesting. Someone was talking about decentralized things before. I think one of the problems with going on to likes of OpenSea and Rarible is you're actually centralizing again.
There's something recently I heard more and more NFT lending, credit card or something like that. I can't quite wrap my head around what exactly is the intentions of these things. It's I just didn't get it. Would you actually borrow an NFT for overnight and you pay some, I don't know, plug in ETH or something like that for that? I wouldn't do that, but just I don't know. Would anyone do that? I'm curious.
But I'm seeing it at the moment where people are now beginning to explore using NFTs as effectively digital share certificates. Where they do represent.
Yeah, I heard of that. I mean, there's I think there's a hedge fund who did something like that. Some kind of investor, they invested into the fund and they use an NFT to show that they hold a certain percentage of the fund, something like that.
Yeah, and what that then means as well is that if they do something like that, they use that to do the equivalent of a collateralized debt obligation. So a loan backed by a digital asset.
But that would be the difficult part because you have a physical asset and the NFT is a digital one. How do you link the digital and the physical together in the same space? And I think that's the kind of the metaverse problem that's going to resolve.
Yeah. But it's interesting as well because if they do crack that, it makes it much easier to do. And if you think about the 2008, 2009 global financial crash, one of the problems about that was when they were trying to unwind positions of debt obligations and baskets and that kind of thing, that they just couldn't unwind them because they couldn't track and trace the original underlying assets, as you say, the physical assets. Yeah. Whereas if you've got an NFT,
right?
Yeah. Whereas if you've got an NFT which is on a blockchain and is immutable, in theory at least, it should be easier to track and trace through the data lineage. We'll see anyway. So.
But with that, Gary, I'm working with a group in Singapore that is building a global, and I mean a global because it's being funded by the Development Bank of Singapore, the Singapore government, and a couple of other very wealthy individuals, to establish a carbon credit trading scheme where all of the certificates are actually related to various portions of rainforests. They've got about 15 million hectares, I think, and they're breaking it up into 1/10 of hectare for each certificate.
Okay.
And so they've got 150 million certificates. They're using, and so we're using we're establishing with a software organization to use NFTs, because each certificate will be a unique number, just like a share certificate. This will be each carbon credit certificate will be a unique number attached to it, and they will be trading on the blockchain those NFTs.
And that sounds really, really interesting, because then you've got a real life example of a physical asset with a certificate of ownership against it, which you can then trade.
Yeah, because we, the people that are funding all of this are very, very well connected, and they're talking to steel companies in Southeast Asia that may, if you have like the way they're selling it is that if you have an organization, let's say, I'll make one up, Mitsubishi Steel, they've got 3 plants, they want to sell one. Each plant has carbon credit certificates attached to it. They'll be selling not only the plant, but also the certificates attached to that to offset their carbon credit emissions.
That's pretty neat then, isn't it? Because that's verifiable, which is a really powerful thing. And being digital makes it more easily tradable as well.
Yeah, and LockBlock is going to provide the security aspects for it.
Fantastic. Well, that's a name that's getting more and more familiarity in the crypto world at the moment, in terms of crypto custody and security, and that's great. Well, thanks for sharing that, Adrian. Definitely want to keep an eye out on, because everyone's getting into this whole ESG or CSR or whatever it is around
ESG,
sustainability. Yeah,
environment, society, and governance. Yeah.
So I guess if we can have carbon credits offsetting and trading, that's definitely a way forwards. Definitely look forward to hearing more information when that becomes a bit more public or whatever. Then that'd be good. Excellent. I was taking a look at what the likes of Bitcoin and Ethereum are doing at the moment. Might be worthwhile just sharing a screen actually on that. And I'm seeing that even though the market's been dropping away, the market cap of crypto is still over $2.2 trillion, which is growing gradually, but it's still relatively small compared to the traditional markets. But I noticed earlier on that Bitcoin had dropped below $47,000 earlier on today. And I know people get a bit nervous when it dropped below 50. And so I don't know if anyone's been keeping an eye on it today. Any major moves?
Deja vu, was it? Like a few years ago.
Say that again?
So a bit like a deja vu.
Yeah.
A few years ago.
Yep.
Like the year end, and then Bitcoin drop, and then people sell, and then later on they regret it.
I think you're exactly right on that. I remember at the end of 2017 when exactly that happened, that Bitcoin went to $20,000, and then just before the new year, it dropped away and it went down to, I think it was 8,000 something. So yeah, I think you're right. It might be 2017 happening in 2021. Yeah. I don't know, Peter, in terms of volumes and other indicators that have been going on, have you been seeing anything going on with Bitcoin this week?
Actually, one of privacy itself hasn't been kind of following that closely, as the day trade movement isn't that important as well as larger movements. In terms of on-chain, etc., it looks very different to the end of 2017. What you do see is the long-term holders have already got a large portion of supply, and they are eating away at it. So kind of, and then also kind of through this, since Bitcoin dropped below kind of 53k, which was kind of a key mark. The kind of long-term holders have been very active, and kind of circulating supply has continued to diminish by a non-neglectable amount. So far, there haven't been enough kind of buyers to kind of push the kind of price above the key mark of 53,000. The next key mark is 47,000. If that fails to hold, it could kind of fall to 40,000, but you would expect it to bounce pretty quickly off that.
Okay, well, it's just below 47 at the moment, which is kind of interesting. So maybe we're hovering around a decision point. I don't know what the tighter trading is on it at the moment. But it's interesting. You mentioned something really important for people on this call then, about in terms of how the circulating supply is decreasing. And that is, as I understand it, I think the way you describe it as well, it's because you've got certain holders, certain whales, whatever you want to call them, who appear to be accumulating at the moment. So that the buying up the coins as they're available, and then they're not selling them on again. Is that fair, the way you're describing it?
Yeah, they tend to kind of hold until there's a strong bull market, and they sell into the strong bull market. At the moment, yeah, they are. I mean, they were selling in kind of like kind of mid to late to early November. Since then, they've been busy buying, and they've continued to happen since the big crash 2 weeks ago.
Okay.
And despite the big crash, so far we've not seen much panic selling, or we haven't seen a big influx in supply, which we saw in May. So far, there was a kind of a moment where it kind of leveled off, and since then it's continued to go down steadily.
Because I've just pulled up the 1 minute chart on Bitcoin. I tend not to look at it that granularly that often, just to see what happened when it went through the 47k mark about 2 hours ago or 3 hours ago. And you're absolutely right. You look what's happened is it's gone down through 47, and it's kind of like beginning to fall off a cliff face a little bit at the moment. It's lost nearly $400, $500 by the look of it in a couple of hours. So I think you're absolutely spot on in terms of calling it that 47k was like a resistance line in some way.
Yeah, support line is around kind of 46.5 to 47 is kind of a key support. They can't hold that, it might hold down a fair bit lower.
Okay. It's a shame we didn't have this meeting 2 hours ago then, because everyone could have capitalized on that prediction. Yeah, so that's a good call, Peter, in terms of this whole resistance point. I guess it's going to depend really now on where it goes from here as to whether it drops below. It seems to be holding out 46.7. It's whether it's going to go below that or not is going to be exciting, because there were a load of sell orders being triggered by the look of it before it's all settled now.
Yeah, it may have been. I mean, could have a lot of technical strategies. Might well have had some kind of what's it called, stop losses in that region.
Yeah.
Though kind of if it goes much lower, there's probably a lot more not far away from this sell point. I've not looked at the data, but yeah, if it goes, yeah, the 46 will probably drop a fair bit lower.
Okay, and you're talking about potentially going down to 40 then, thereabouts.
I mean, the next kind of big supply zone is 40, 41,000.
Okay, and as I always say to people on the calls,
this bounced up in at the end of September. So there's going to be likely to be a lot of buyers there.
Okay, yeah. So as they always say, this is not financial advice, but keep an eye on the market, definitely. And it certainly seems to be heading this way at the moment. I was just watching on the 1 minute charts, which are always far too attention grabbing. The way you can see it was beginning to recover, and then it's like, oh no, it didn't do it, and it seems to be going in a sell phase again. So yeah, maybe 40k is on the way. Usually after these meetings, Bitcoin goes up in price, so it's going to be interesting to see if it actually drops down much further.
I've got a question on tokenization, in terms of like company shares, etc. Is it better to do kind of fungible tokens or kind of a fractionalized NFT? like what are the trends these days? So a lot of people are talking about, like, for example, we're talking before about NFTs for carbon credits. What, like, originally, kind of all the thought fungible tokens might have been a better way to go there.
I guess Adrian might be able to offer some insight on this, but I'll begin with the whole thing that if you think about the ICO craze of 2017, 2018, where companies were raising money through what are effectively securities offerings, even though they refused to admit they were at the time, they were fungible tokens. So that they were tokens that had a percentage, a holding in effectively a fund, as opposed to a specific share certificate. But I don't know, Adrian, have you got any thoughts about trends at the moment, whether you're seeing companies beginning to tokenize their shares in any way?
Well, if they tokenize their shares, there's still going to be a security, so they'll still have to. I note that the SEC has stepped in on a DAO that's registered with the state of Wyoming, which is the only jurisdiction in the world that recognizes DAOs as a legal entity. And the SEC, Gary Gensler's group, has stated that you may register a DAO in the state of Wyoming, but the moment you issue any tokens, that's a security.
Okay.
And so you have to comply with the Securities Act of 1936. I would imagine the same would occur with the Financial Conduct Authority as well in the United Kingdom, that even though, and I don't think that the UK currently recognizes DAOs as an entity, but if they do, you'll still need, if you're going to start doing with NFTs on securities, on share certificates, that'll be still a security no matter what. It doesn't matter what it looks like, right? I could issue a share certificate on, any type of piece of paper, any type of metal. It doesn't matter what the artifact is. It's what the underlying structure legally is.
Yep.
So,
that's the kind of thing. It may well be that companies are simply looking at ways of digitizing share ownership, but it's still share ownership at the end of the day.
Yeah, it's still share ownership. I mean, the issue with the carbon credit trading scheme is that they may be a security, but you're dealing with large amounts of money, huge amounts of money. If you went to Mitsubishi Steel, you don't need an IPO or anything like that. They are sophisticated organizations that you can trade in Singapore. They're trading carbon certificates no matter what. I mean, the certificates themselves are going to be worth quite a substantial sum of money. There's going to be a huge amount of security around it because, as we know, where there's money, there's crime. So it'll be a substantial target to hackers and different other nefarious groups. So it's a slow process. I don't think that the Singapore trading, the carbon credit trading scheme will be up for at least another, let me see, it's December 2021 now. I would expect it to be probably June 2023. Okay. It's going to be a very big, because we also have to comply, the organizers have to comply with a whole heap of regulatory frameworks. MAS will be involved, the Monetary Authority of Singapore. And because it's a global, they will want to make sure that it's recognized right across the world. Germany is a very strong proponent for carbon credit certificates, not necessarily on the blockchain, but they have some very strong regulations. The EU is looking at it in a very serious manner, so as they can get down to their net zero by 2050. So yeah, there's a lot of regulatory issues that still have to be solved with carbon credit certificates, but they're not, even if they are regarded as a security, the amount of money and funds involved will simply take them out of the IPO arrangements.
So I guess that leads nicely back to the initial question about whether companies are thinking of using fungible or non-fungible tokens in some way, because I guess a consideration is going to be the regulatory aspect. So things like a company has to have an up-to-date share register. And one of the handy things, at least, is that if shares are numbered in some way, then you've got an association that this share is owned by this person, whatever, which can be quite useful. Whereas if it's a...
Yeah, the issue there is that when you look at share certificates, most of them are a single certificate with multiple numbers on them. When I mean by multiple numbers, like I've got shares in companies, but I've got one share certificate, but it says that I have 300,000 shares in the company as a single certificate. With the NFT, you'll actually have to have 300,000 NFTs.
Or an NFT that represents X shares in some way as a tranche, I imagine.
But then the issue then comes to divisibility, and that then creates a totally different structure. You're better off, if you're going to have 300,000 shares in NFTs, you have to have 300,000 NFTs. That's not a big thing, right? And each NFT is unique, and so therefore it fits within the framework of ERC1155.
So
I was thinking more in the kind of space of you creating a kind of one NFT for the company, but then you kind of fractionalize it using kind of ERC11.
No.
So the 1155, if I remember correctly, allows you to effectively, that is a token that is representative of ownership of other tokens. You can't use it explicitly to fractionalize another token.
Okay. I thought that was like the kind of, like batch NFTs, etc.
Yeah, so from what I remember, for those who aren't quite so technical, it's probably worthwhile quickly going into this a little bit further. So a token is an entry that is managed by a smart contract. And the smart contracts are written to a particular standard usually. And on Ethereum, you've got a standard called ERC20. And so that was the smart contract standard for tokens that we use for ICOs a few years ago. So that was a fungible token. It was interchangeable. No specific one was unique in any way. Then you had this dawn of NFTs, which is where you've got a new type of token, which is based on what's called the ERC721 standard. So when you hear about NFTs at the moment, you'll hear ERC721. That is a non-fungible token, as in it's a token that represents something totally unique in some way. So it's like owning the Mona Lisa as opposed to a copy of the Mona Lisa. You've then got a couple of other standards that are coming up, and the one we just mentioned there, the ERC1155, allows you to do effectively groups of tokens that may be fungible or non-fungible, which when you think about that initially, it does your head in a little bit. So if you think about it, if you've got a virtual art gallery and you've got a token that represents ownership of that virtual art gallery, and then within that virtual art gallery, which you step into with your VR headset or whatever, are virtual digital art NFTs on the wall, which are individual NFTs, then 1155 is kind of like the group or the basket of all of those, which allows you to bundle a load of NFTs together and sell it as a single package in some way, which is quite nice, because that then addresses, you know, as Adrian was saying about representing portions of hectares of trees and this kind of thing. But the other thing an 1155 token standard allows you to do is not just have these virtual NFTs all bundled together, which are non-fungible, i.e. they're unique assets. It also allows you to blend in fungible tokens. So it's a mixture of being a security and an asset and all sorts of things. So Peter, I think it's still early days on this. I don't think there's that many examples of ERC1155 tokens being used yet. But my thinking was that people are using 1155s to effectively act as a basket of smaller denomination tokens in some way. Does that make sense?
Okay.
So I don't think 1155s are being used to do fractional ownership, but I think you might have an 1155 that is made up of multiple other tokens, which is a form of fractionalization. All gets very confusing, doesn't it? Yeah, Rob, stick with Bitcoin and Ethereum. Just look at the candlesticks that you sourced from. I don't know, Mike or Nick, have you got any exposure on these tokens, understanding them at all?
No, I mean, when you're talking about fractalization, I looked at fractalization of art collection, also looked at the music NFTs. I think things have been done, but I think it's a bit on the slow side. I think there are a lot of still legal issues, I guess. I mean, I guess writing the smart contracts is the easier part, but then you start going the whole legal complication of phones. All at the end of the day, it's becoming quite an expensive legal exercise, right? And I don't think it's that kind of.
Yeah, I've seen it with a couple of examples of art, and it's similar to with real estate as well. That what a few companies have actually done is that they've taken an asset, so whether it's a piece of fine art or a building or whatever,
put in the storage house or
well beyond that, in fact, put it into a trust or a special purpose vehicle, so a separate entity that actually owns that asset, and then you have fractional ownership in that special purpose vehicle. And that begins to address some of the legal issues, but I know Adrian's the legal guy on this call, so I'm not going to go too far down that route. But certainly I've seen it with some where they're trying to do fractional ownership, because you sometimes hit complexity of trying to use technology to do stuff that you don't realize is potentially breaking the law unintentionally. So a simple example of that is in the UK. If I remember correctly, the UK has a rule that you can have at most, I think it's 20, possibly 30 people can own a property or be the joint owners in some way. There is actually a limit to how many people can have a share in a property. And so the way they work around that sometimes is that you actually have a company that owns the property, and then you sell shares in the company that owns the property. So it's kind of like an equivalence. It's sort of like a derivative without it being a derivative. But I don't know if that's just muddied the waters or made things even.
No, it makes sense. Totally makes sense.
Yep. Cool. Has anyone got any other questions or anything today? Interestingly, different mixture of people internationally as well. We've got the whole of the globe from Australia to the UK today.
You might have seen Blockwork Report is out. It's another good report, like 150 pages. Messari was out like 2 weeks ago, and
Okay.
Blockwork was out, I think, this week.
I hadn't seen that. Is that just a market review or something then?
It's called like 2022 Outlook for the Digital Assets.
Okay.
So it's like quite. I'm with you in a couple of groups. So I'll send you either Telegram or WhatsApp, so you will have it.
That'd be good. Thank you for that. I'm just taking a quick look as we're Blockwork.
Yeah.
Okay, it's we've got the Digital Asset 2022 Outlook. Is that the one?
Yeah, that's the one. Yeah.
Okay, so I'll just share the screen on that so people can take a note on that.
Can you put the URL in the chat?
Yeah. I'm guessing it's this one here, which is the Digital Asset Outlook. Yeah, so if I just stick that in the chat for those who are interested. So that's worth taking a look at, is it?
Yeah, pretty much.
Yeah. So it's always interesting because this looks like it's got kind of like the predictions going forwards. Nice. as opposed to some who just spend all their time talking about what's already happened, which doesn't always add that much value on things. So there you go. Good one to take a look at after the call then. Excellent. Thanks for sharing that. Have you taken a look through it already then, Nick? Is there any key insights you can share with us?
No, just start reading it like literally before the call.
Okay, fair enough. Yeah, but that's the usual thing about sessions like this. You sometimes come across things that people go, "Oh, you should take a look at this," or whatever.
Yeah,
so yeah, I'll definitely check
I'm
that out.
usually following Blockwork seminars, webinars, so it's definitely a good source of information about what's happening in the crypto space.
Okay, I shall take a look at that one later on then, and see what they have to say. Because the only other ones you tend to see is where people keep predicting that Bitcoin's going to be at $100,000, which isn't a surprise and isn't greatly of interest if you're actually looking at the technology and where the market's going. Because I saw something published, I think it was today. I can't remember who published it now, who basically said that 2022 is going to be the year of blockchain again, in terms of live projects. I think I saw something on LinkedIn earlier on that it was some major piece of research that said 2022 is going to be the year of blockchain. But I can't remember which site it was now. Okay, so we'll
I'd be interested to see who paid for the research.
you're right. It's where you discover it's a blockchain company who funded it in some way.
That's right.
Or a blockchain consultancy.
Mm.
You're right on that. That's so often the case with these things. Anyone else got any other interesting news? I see Ripple was in the press again this week. It looks like they're getting close to closure on the court case with that. Don't know if anyone's been keeping an eye out on that at all.
No, but I did notice that George Lucas has decided that he's not going to go issuing NFTs because Disney have come down on him on the Star Wars. They're claiming all the ownership now. I mean, he got paid $4 billion and he was going to issue some original NFTs on Star Wars, but I think he's backed off now that Disney's come in and said, wait a minute, that's what we paid for the $4 billion. You can't start coming back on anything.
Okay. It's where you discover who actually owns IP at times, isn't quite who think they own it, even though it's all written in big contracts and that kind of thing. So, okay.
Well, that's right. I mean, the thing about NFTs, which I haven't quite understood, in economics, there's things called rivalrous and non-rivalrous assets. A rivalrous asset is like a physical item. If I give you a pen, I no longer have possession of the pen. You have the pen, right? And so it rivals its in. You can't, whereas non-rivalrous assets are like information, copyright, patents, where the distribution costs are generally close to zero or are zero. And that's why you get cost of goods sold in copyright and software is very, very low, whereas in physical items, it can be quite high.
Okay.
The thing about NFTs is that it doesn't, all it does is identify ownership of a particular digital artifact or some physical artifact, but it doesn't create a rivalrous asset out of it. And there are certain technologies where you can create a rivalrous asset with some applied cryptography to say that I have this information. If I give it to Gary, I lose access to that information. Now Gary has that information and only Gary can distribute it. So if you have like the Beeple piece of art, I've got a copy of that Beeple piece of art on my screensaver, right? So why would I pay 63 million bucks just to be the unique owner of it? I still don't own the copyright to it. All I own is that particular, I can show that I own that particular image that has some provenance attached to it. Whereas my copy, it's just a copy that I put on my screensaver from the internet. But but the thing is that because it's digital, it's really no different to what the person who paid $63 million for. So I can't quite get my head around what was so special about that particular image, whereas I've got exactly the same image, but I can't show ownership of it.
It kind of comes back to it's funny, isn't it? Because one of the problems in inverted commas that crypto on a blockchain was meant to solve was the old double spend problem. That this notion that up until the creation of blockchains, you could copy files, you could transfer files, you could do all sorts of things, but you still had this risk of duplication, copying, and all that kind of thing. Whereas at least if there's an entry on a blockchain, it shows unique ownership. But that's all it is. It shows unique ownership. It does not provide unique ownership. So I describe it in some way, and this particularly with NFTs. At times, an NFT is like having the receipts show that you own the goods. And that's all it is. It's not the actual goods, it's the receipt.
No, that's right. That's exactly right. It's not the actual goods. It's and that's why, you know, my copy is off-chain, right? Whereas there is an on-chain that shows that someone paid $63 million or whatever the amount is. I think it actually ended up with the Christie's fee. It came out over $70 million US. So I just don't, I can't quite get my head around that aspect yet as to why it's so important. But there again, but the other thing is that if I have a copy of the Mona Lisa, right, you can tell that that's a copy just by looking at it. Whereas the original, even though we know that it's in the Louvre, but let's pick, you know, any other artist that you can tell that there's a degradation in between the copy and the original. With digital art, there is no degradation because it's still bits, zeros and ones.
Well, but that's the thing, having dealt with a few people in the art world, you come to realize that when they're buying NFTs, what they're doing is purely buying bragging rights to be able to say, and all an NFT is, it's proving that they own something. It's not limiting the access to that asset in some way. Because exactly as you say, if it's a JPEG or something, it's relatively trivial at the moment to copy a JPEG, and it is absolutely identical in absolutely every way, unless you've got some sort of encryption layer built into it in some way. I think
you could have a steganography on the least significant bit of identifying something attached to it, but I just don't see that there's that much value in it. I mean,
just one point, I think on the NFT, if they're not arts, they are like gaming stuff. It might actually be kind of useful in a gaming way. For example, depending on what games you play, but something like, I think like League of Legends or something like that, I heard that there's some weapons, and if you have it on your character, you could like eliminate other players more effectively, and it makes your character stronger or like competition.
That's captured inside the game, right? That's captured inside the game. That will have some value attached to it. The issue is that the vast majority of the artwork is outside of any closed environment. I mean, I can, if I do a Google, you can do the Google on Beeple, right? And you'll come up with literally 30, maybe 40 images of his artwork, right? And you can save them as a screensaver.
Yeah, but like that's basically the pirate's way of like, you know, saving things up. Like you could, like, for example, listen to a song and you record it and then you could just listen to it again, right? But literally doesn't mean that you like buy the record or something like that. But that's one of the way you could look at it. Like literally you just use it to maybe decorate your own web page. But I agree with you in terms of the artworks of NFT. It's more like, some people say it's investments, but some more like just a bragging right. But do you think that like on the gaming side, the NFT would be very practical because it could be a game changer for some players, I think.
Oh, I agree. I agree with that entirely. That, you know, if you've got it in a closed environment, then NFTs can become very, very valuable. It reminds me of a bit like the old Second Life, where people were buying islands and everything, right? Caught inside the game.
But that's all happening.
That wasn't a blockchain. That was just a centralized server arrangement with a whole heap of sharding.
Yeah. But we seem to be going through that again, that instead of Linden coins, which I think was the currency used in Second Life.
That's right, Linden coin.
You've got it being... This is where when you start talking about metaverses, you start extending into this whole thing, which is interesting because, Adrian, you were saying about it's okay if it's within that one game. But my understanding of the way people are looking at metaverses, it might make things interoperable across games. So all of a sudden, the NFT that you've got in Second Life for a piece of real estate for some virtual land might actually work in Rise of Nations or Roblox or whatever as well, or Civ 6 or all these kind of things. So
well, that's really going to have to require some sort of standardization of, because once you start talking about interoperability, that becomes, I mean, we don't even have very good interoperability between current blockchains. Yeah. So there's and I'm on the standards committee for blockchain, and you know, it's a very difficult area in this whole exercise. I mean, yeah. I don't have the answer, I can assure you of that.
Yeah. Well, the other one that gets really interesting as well is the whole thing of what happens when you get disputes in the metaverse as to, you know, governing law, jurisdiction and all that kind of thing. I've seen a couple of threads recently from people exploring the idea of how do you provide legal services within a virtual metaverse world which isn't connected to a real world legal structure type thing. The one I keep coming up with is what happens if my avatar, which isn't me and isn't legally me, if I've got a bit of software, which is an algorithm or a chatbot or whatever, and it goes and arbitrarily goes and buys something from a marketplace that is on a DAO, which is a DAO-based algorithm, and again, that isn't owned by anybody. What happens if those two algorithms get into a dispute in some way? Where's the legal process with that?
Well, there are provisions. I mean, Section 14 of the Uniform Electronic Transactions Act in the United States is the first piece of legislation that recognized software agents. Okay. And UNCITRAL picked up that, and you'll find that in many jurisdictions, Australia in particular, we have Section 16AA of our Electronic Transactions Act. There's an equivalent in the United Kingdom. I think it's called the Electronic Communications Act, if I remember correctly. There is a provision now that recognizes software agents, and the long and the short of that structure is that if you have a software agent and it somehow is released with or without your knowledge, and I even think that it even goes so far as covering hackers releasing it illegally, you are still held accountable for the civil liability that rises out of that. So you'd have to be liable for the contracts that arise. Now, the issue then, which is a little bit different from what you've identified, what happens if two software agents have been released and they have the dispute? I think that's a little bit too hard at the present moment from a philosophical or legal perspective to actually work out who's liable or whatever. Yep. And I feel sorry for the poor schmuck known as a judge who's got to decide that at the end.
Well, that's where it comes down to do you actually solve that within the metaverse where you have an entirely different legal judicial system or whatever, or is it something where it eventually comes out into the real world again? And as you say, a real world judge sitting in a physical court somewhere makes the decision.
Well, yeah, I mean, I'm on the Australian Law Council's Digital Commerce Committee, and we're holding on, it's either going to be the 18th of January or the 1st or 2nd of February, a conference. It's a closed conference for judges in Australia to teach them about artificial intelligence, data privacy within artificial intelligence, and also software agents on a blockchain within artificial intelligence. So I'll come back to you after that and see what the judges think.
Yep, that'll be interesting, definitely. So thanks, Adrian. Okay, I'm just conscious we've only got a couple of minutes left, and we went quite deep then in terms of, as Adrian says, there's some quite good philosophical things on there. Before we finish for the day, does anyone have any particular thoughts or questions or comments or anything they'd like to ask?
Going back to the NFT point, and kind of, yeah, what is the value of digital art? Essentially, all high value art is essentially like status and bragging rights.
Yep.
When you buy kind of a expensive piece of art, you don't hang it on your wall, you have it in a vault, and you kind of pretty much get an indistinguishable replica made for a fraction of the price, and you whack it on the wall. It's all about, yeah, the status and the bragging rights. Value is all goes back to scarcity, and yeah, you can kind of copy a JPEG, but essentially you don't have the kind of social status of holding that piece of art, and that's the unique thing, and that's the kind of bit that can't be copied. So if the kind of NFT issuer kind of decides to kind of replicate kind of that NFT, because the NFTs only kind of prevent that NFT data being copied, but it doesn't prevent someone kind of essentially creating a fake NFT, then you have potential issues.
Yeah, I think you got it exactly right. And I came to realize, having worked in this space for a little while now, that the more money that people have, the more important it is for them to be able to brag about things as opposed to actually have valuable things. It seems. I know some people in the art world are just off the scale in that. So I think you're right on that, Peter. But folks, we're kind of out of time. I always try and close these off on the hour. So I was going to say thank you very much for all the interesting insights and contributions and questions, and hopefully some answers on that. Hopefully everyone found it worthwhile coming along. Anyone who's watching the recording afterwards, I hope you find it interesting as well. Because it's just before Christmas, I'll wish everyone a Merry Christmas, Happy New Year, and tell you to go and wash your hands and be safe.
Yes.
Thank you.
Have a good one,
I'll
folks.
talk to you on Wednesday.
That'll be good. See you around there.
See ya. Bye.
See you
Thank you
guys.
very much.
Bye now.
Bye.
See ya.